Everyone is talking about the Fed's big decision to cut interest rates by 50 basis points and how it might cause a recession and crash Bitcoin. Today, I want to talk about the two entities who seemingly don't care about what the Fed is doing because they have been buying record amount of Bitcoin this week. So today, we are going to expose those two entities with my buddy Luke. So Luke, welcome to the program, man. What are you thinking about this big decision that the Fed is making and how everything's reacting to the Fed cutting interest rates by 50 basis points? Looks like we might have
This
some
is
technical.
a massive day. I'm really excited to get into exposing who these two Bitcoin buyers are. Let's cover the macro stuff first, though, Brandon.
Yeah, 100%. So the Fed has slashed interest rates by 50 basis points, which is one of the most aggressive starts to easing in a very long time. So everybody has been waiting, and the market has been essentially calling for this interest rate cut since last year. The market has been waiting for it. It's been very wrong on all of this. And at a certain point in time, the Fed has now caught up. We actually even had Elizabeth Warren last week calling Jerome Powell, trying to get him to cut 75 basis points. So even though this 50 basis point cut is very historic, it is still a very huge cut when you look at historically as to what the cuts have been. So yeah, the Fed cutting interest rates by half a point, very big, very big, very big to say the very least. But I think the craziest part about all this is prior to this, nobody knew what the Fed was really going to do. I mean, if you look at this right here, it would have been the biggest uncertain market decision in the last 15 years if the market would have, or if the Fed would have cut by 25 basis points and if they would have cut by 50 basis points. So still, even with all that, we're seeing a huge surprise in the market. Nobody knew what the Fed was doing before today. And now it seems like they came to the decision to cut 50 basis points. So what do you make of all this decision here, Luke?
I think it's super interesting. I think Bitcoin's reacting positively. It just hit its highest price in 3 weeks today. So maybe, just maybe, we found a Bitcoin bottom. I don't know, but I think it's really interesting to see the market.
Looks like we got Luke lagging here again, but I agree with you, Luke. I think it's really interesting how we're seeing the market lag and kind of anticipate this. It's almost like that the market is anticipating this rate cut coming forward. I mean, like I said, the market has been calling for something like this for quite some time. And everybody's been super bullish on a rate cut and how that's going to affect risk on and risk off assets, especially risk on assets is what Bitcoin is normally categorized. But it seems like we got Luke back here. So Luke, yeah, what do you make of all of it? Are you surprised by this, the huge 50 basis point decision, and what do you make of all of this?
Yeah, so I think that it's impossible to be surprised right now. I am prepared for anything in the macro land. I'm prepared for a 50 basis point hike tomorrow. I think that's the way portfolios and their frameworks. I think that you should not be surprised at whatever the Fed may or may not do. Okay. The market looks as if it's leaning bullish. It looks as if it likes these rate cuts. The S&P 500 today hit a new all-time high. The NASDAQ isn't quite at an all-time high, but it kind of looks as if it's on the way to hitting a new all-time high. And Bitcoin's at its highest price in 3 weeks. So again, no, the market's volatile on the days that the Fed makes a decision. So again, tomorrow, be prepared for a puke. Be prepared for people to maybe wake up and realize, why is the Fed cutting rates? Why did they choose a 50 basis point rate cut to start this pivot? Because a lot of people say normally the Fed likes to start a pivot slowly. They just raise rates at the fastest rate ever in 2022. They pause for 2023. Shouldn't they lower them slowly and 25 basis points? Some people, the bears, are saying, look, the fact that they started with 50 says that they know they need to cut rates a lot, and that's because the economy is really weak. That's the argument that some people are making. Again, on what macro is doing and saying, I'd love your thoughts, Brandon.
Yeah, I mean, I agree with you there. Like, I mean, I think that this cut is a sign that everything is not all peaches and daisies out there. I think, everybody, if you look at the CPI numbers that are printed and everything else, the governmental data that they're putting out there is not necessarily exactly what, the whole scenario is, right? I mean, it seems like at a certain point, you got to admit that the market is not indicative of really, what everything is going on. And Luke, you named a bunch of things there that are hitting new all-time high. You missed gold. Gold is usually a leading indicator of, the potential threat of more inflation ahead. So I think that, it is bullish for asset prices, but I do think that we're going to have seemingly a melt up here. And the reason I'm saying that is because if you look at here, the past 3 times rates were cut, recessions followed in 12 months shortly thereafter, right? I mean, we had a 100 basis point cut in 01, a 50 basis point cut in 2007, and a 25 basis point cut in 2019. Obviously, we had COVID happen in 2020, so that was probably another factor as the reason why. But, the other two had major crashes shortly thereafter. So I think that, the basis point cut is not necessarily super, super bullish going forward. And I think, it's something that we got to keep an eye on for everything here going forward too. And as a good friend of the program here, James Lavish always likes to tweet out too, the US government debt 35 trillion, and if we return 0% of interest, we still owe $1 million per hour. So I mean, it's seemingly like we're in this debt spiral here. And cutting interest rates or moving interest rates at a certain point, just making money more expensive, we would have to aggressively keep that policy high in order to combat the debt. But people are more looking at asset prices as indications of how good the market is doing, and people want to stay in power. So I think at a certain point in time, all of these guys, they're looking at really just how they can stay in power. And one of those tools that they're using is the interest rate stuff to keep asset prices elevated, keep their rich, wealthy friends happy. And I think that's what's really going on here.
Yeah, so I really like that James Lavish tweet. It really summarizes perspective, I think, because a lot of people are really scared. They're saying, oh, the Fed's cutting interest rates, recession is coming. But something that we have this time in this interest rate cutting cycle that we didn't have before is this enormous $35 trillion debt load. And James makes a pretty good point. If we were to pay back $1 million per hour, we would be paying that back for over 4,000 years until the year 6047 if we were to pay back the $35 trillion of debt. So I think that is good perspective to keep in mind. The Fed cannot allow stock markets to crash by 50% and keep interest rates very high, because even if interest rates were at zero, it's going to take 4,000 years to pay off the debt. Interest rates right now are still around 5%, which means it's going to take a lot longer and a lot more money every day to be paying off that debt. So I think, like you said a little bit earlier, my base case is kind of like a melt up. Mine is the same, and that's because of this debt spiral that I believe we're in. The smartest macro minds that I bump into on Twitter, who are most concerned about the yield curve inversion or, a recession coming, all of these really smart guys, a lot of them, I don't want to overgeneralize, but they don't seem to think that there's a debt problem. They seem to think that, the whole de-dollarization thing is overblown. They believe that economic history doesn't apply to the US. Again, the US has a debt to GDP of 125%. Historically, you've got a 98.6% chance of default once you're at that 130% debt to GDP level. And all of the guys who are most bearish and most concerned about a massive market crash, they don't seem to think that the debt matters. So I think that's maybe where you and I both might have a slightly different perspective, Brandon. I don't want to put words in your mouth, but I'd love your thoughts.
Yeah, no, I mean, I definitely think that the debt spiral that we're in is just essentially uncontrollable. But at a certain point in time, right? I mean, in order to get out of this debt, they're going to have to keep printing more money. And where does that money generally go? It goes into businesses. They try to inject liquidity, and it's injecting liquidity into markets. So people flee into hard assets. So I think one thing that we can agree on here, Luke, is that we're looking at a melt up here. So I like this tweet of yours where history doesn't repeat, but it often rhymes. So look at where we're at right here. I believe this is the Bitcoin price, and we can see it here as post the halving time. And what are we going to have down here, right? We just had the interest rates being cut. And we're looking at potentially some more quantitative easing coming forward. And generally speaking, quantitative easing, when that comes forward, we start to see a lot of things happen, and usually that's the smart money fleeing towards hard assets. And what is the hardest, most liquid asset out there? It's Bitcoin. So I think it's very bullish for Bitcoin going forward. And I'm not the only one that really thinks about it all that way, except for we're looking at getting ahead of myself. We're looking at the price stability here of gold on the low. And the other interesting thing too is I brought it up a little bit earlier about how gold is reaching a new all-time high. So I mean, I think what smart money is looking at is that investors inflation, is not necessarily under control like the Fed is trying to market it as, and that these hard assets are going to start to run up. And I think this is just indicative of what all is going on. And I don't think we're the only ones who are really thinking that, Luke. I think a lot of the smart money is starting to flee towards these hard assets as well.
Yeah, so the reason I like that chart that you had up a second ago is because I think it kind of calls a bluff on the Federal Reserve. A lot of people believe that the Federal Reserve can control recessions, control inflation. They can land this plane softly. That's what they say. Soft landing, baby. Janet Yellen even said recently, we are headed towards a soft landing. Everybody believes that we need to listen to the Wizard of Oz. They are all powerful, almighty. But I really like this chart here because it kind of exposes the lie around price stability and the Federal Reserve's 2% inflation target. You can see the big red line in the middle of that chart. On the left-hand side, that's looking at what the markets were doing in the gold standard. So this chart is measuring the Dow Jones, that's the biggest stock market in America, it was anyway in the 1800s, divided by gold. You can see this ratio traded in this little green band pretty tightly. Markets weren't super volatile. Then the Federal Reserve was created in 1913, as you can see by the red line, and markets have gone freaking haywire since then. And that is all because the people who claim to be the firefighters, they're actually the arsonists of the same fire. They're the ones who create the fire and then get on stage publicly and pat themselves on the back for saying, we're such a great firefighter, look what we're doing. But no, the Federal Reserve is not creating price stability. We had more price stability before we had a central bank. And I think this chart is pretty glaringly obvious by showing just how nuts the markets have got since 1913.
Yeah, and I love that, Luke. I love that analogy there, right? I mean, that they're the ones creating the fire, and then they're trying to pat themselves on the back with all of this. So, but I think a lot more people are starting to wake up to what is going on here. And it's not only just, the plebs out here buying Bitcoin, it's massive entities buying it. I mean, we just had the Kingdom of Bhutan. Just you had this great thread exposing how they're buying over 13,000 Bitcoin. I mean, that's a massive, massive amount, and it makes them nearly the third highest Bitcoin holders of any country in the globe. And with all that too, it's a very small country. So they're taking a huge bet on Bitcoin and what all is going on there and everything like that, just compared to their GDP. It's absolutely outstanding. They're just really just putting the pedal to the metal on how much they're buying. And I think it's because they're seeing what is going on here. They're writing on the wall, right? I mean, you saw the volatility in the market that you pointed out post the Federal Reserve being created. And not only that, you're seeing everything else just essentially kind of go to shit since then. So, I think that people are looking for more of an out and an escape, and they're finding it in Bitcoin, to say the very least. And countries are going to start putting this on their on the balance sheet. And I think it's just a matter of time before more countries start to come out and put Bitcoin on their balance sheet, just like the Kingdom of Bhutan.
Yeah, I think the Kingdom of Bhutan is massive. This announcement that got exposed 2 days ago by an on-chain analytics firm, Arkham Intelligence. They were the company who was tracking Germany, who sold their 50,000 Bitcoin recently. But they found via satellite imagery that they were actually able to expose the Kingdom of Bhutan's Bitcoin mining operations. And this is how they were able to find their on-chain Bitcoin wallets. So until last week, we all knew that the Kingdom of Bhutan was buying Bitcoin. They admitted that they were using Celsius and BlockFi to buy Bitcoin and get US dollar stablecoin loans. And they even said they've been mining Bitcoin since 2019, but we didn't know how much Bitcoin they held. And Arkham Intelligence revealed that they're actually squatting on the fourth most amount of Bitcoin out of any government around the world. So in this tweet, I like to line them up. I like to show the top 5 largest holders of Bitcoin. I got America, China, the UK, the Kingdom of Bhutan, and El Salvador. And I wanted to compare how much Bitcoin per person each country held. So you can see America's got about $38 of Bitcoin per person. China's got about $8 per Bitcoin per person. The UK, $55 per Bitcoin per person, which funny enough is the same as El Salvador, who has $55 of Bitcoin per person. And then you got the Kingdom of Bhutan, who's squatting on $1,000 of Bitcoin per person. And that is because the tiny country only has 782,000 citizens, under 1 million people. So I thought that was pretty cool. And I'm pretty bullish on what the Kingdom of Bhutan is doing, because it's looking as if some people want sovereignty over their money and over their financial system, irrespective of what the Federal Reserve is doing. These guys are still mining over a Bitcoin every single day. Very similar to El Salvador, who's buying a Bitcoin every single day. So again, I think it's pretty interesting. What are your thoughts on the Kingdom of Bhutan, Brandon?
Man, how could you not be bullish on them, right? I mean, they're really putting their money where their mouth is, and they're doubling down at every single point of the that they can. And they're also mining Bitcoin. They're doing all these tactics to try to increase their Bitcoin holdings in order to help increase their citizens going forward. So, I mean, I think it's just going to pay off here at the end. I mean, it's an inevitability here that when quantitative easing happens, the money printer is going to come out. You know, I mean, the signs of a recession are there. The last 3 times that we already stated, you know, since the Fed cut interest rates caused a recession. So I wouldn't be surprised if something happens in the market here drastically, and then we got a melt up. I know we both talked about that as our base case here, Luke. But I mean, it's not only the Kingdom of Bhutan too. We got our buddy Michael Saylor out here, the Chad that he is, just keep buying more and more Bitcoin as it is. So we saw 4 copycats already come on board. And I think that we're going to start to see more too. So not only are we seeing all this from countries and nation states start to buy Bitcoin, we're going to see publicly traded companies come into it. We're going to see private companies start to put Bitcoin on their balance sheet. And I think it's just going to be basically become the standard, right? I mean, I know we joke with the Bitcoin standard, but soon it's going to be a standard that you have to have Bitcoin on your balance sheet in order to be a successful company. And you have to have your Bitcoin on your country's balance sheet if you want your country to prosper. So I think that, you know, with all this being said, we're getting more Saylor lookalikes, not only on the publicly traded company level, but we're also getting Saylor lookalikes on the country level when they're trying to stack Bitcoin. I know El Salvador stacks a Bitcoin a day, and Kingdom of Bhutan mining a Bitcoin a day. I think that it's just going to continue, and it's just going to keep the run up. And I mean, for as small of a country, the Kingdom of Bhutan is, I mean, that guy's got to be a huge Chad as himself, right? I mean, he's just out there just making sure that, you know, his tiny country is going to become one of the more prosperous hubs here coming forward. So what do you make of Michael Saylor chatting into Bitcoin again here, Luke?
Yeah, I mean, huge. Last week, he bought $1.1 billion worth of Bitcoin, his biggest buy in 3 years, which is just massive. And then this week, he comes out and he says, yeah, you know what? We are not done. We're going to offer another $700 million of senior convertible notes to pay back a little bit of debt, but also buy some more Bitcoin. And those were, once again, oversubscribed. I think they were nearly oversubscribed by about $200 million, meaning there was nearly $900 million of demand for this new debt offering that Saylor put out just a couple of days ago. So Saylor's come out with nearly $1 billion Bitcoin buy last week and followed it up with another one this week. I think it's pretty massive. I think it's pretty big. And like we continue to talk about here on the channel, Brandon, people are waking up to the fact that they need freedom money. They need sovereignty. They need to actually take control over their financial means, so to say. They're sick of trusting a central bank or a politician at the head of the Federal Reserve who claims to be embarking on price stability, when you can see very clearly prices are not stable and Jerome Powell is talking nonsense. All of your politicians are talking nonsense. They don't know how to create a soft landing. They don't know how to get prices under control. They don't have a clue how to run the economy. And that is because Keynesian economics always fails in hyperinflation. If you give somebody the power to print, they're going to abuse that power because they're able to benefit their cronies inside the banking cabal. Okay, it's as simple as that. I don't want to get too conspiratorial here, Brandon, but I think at the end of the day, it all comes back to sovereignty. That's the signal. And the Kingdom of Bhutan, the 166th tiniest country in the world, they got a tiny population. They are now the 4th largest Bitcoin holder, and Michael Saylor continues to buy more Bitcoin. And then these people just want financial sovereignty.
100%. And I feel like, Luke, like something's got to pop here, man. I mean, we're looking at the Bitcoin price. I mean, I feel like it's the polar bear holding the beach ball underneath the water meme at this point in time, man. I'm waiting for this run up to come. And now I think that, now the foot is off the brake a little bit and maybe going a little bit on the gas with these interest rates cutting. I think it's just a matter of time before we see this top blow off, Luke. So I'm extremely bullish going forward. We're back above that 60K barrier. I'm going to put it out there. I don't think we're going to see under 60K here again. Maybe we'll see a little reversion tomorrow. But I think, in the next coming weeks, once we start to climb on past that 60K, I think it's all bets are off and it's all to the races. So I'm very bullish going forward, but I'm extremely bullish on holding your Bitcoin and utilizing self-sovereignty and putting it in cold storage, man. I think, Foundation is one of my favorite places to buy and buy a Bitcoin hardware wallet. The Passport, I use it to store my Bitcoin. I think it's absolutely amazing. You can set it up all in 5 minutes. And, it's one of the easiest ways I've found to hold your Bitcoin in cold storage. You can even buy Bitcoin on their Envoy app and send it directly to cold storage, even do it peer-to-peer. You can use, they even have a concierge service and then this great Envoy app that you can use. And you can utilize promo code Green Candle to get 10% off your entire order, or $10 off your entire order, excuse me. And then you could also go to Stampseed and get the best place to store your seed phrase, because I don't know about you, Luke, but I don't feel confident storing all my wealth on a piece of paper. I would rather have it punched into titanium, and they make it super easy for you over at Stampseed to do all that. So I think that's why I'm bullish self-sovereignty in Bitcoin, taking the power away from, the criminals at the Federal Reserve and all that, just causing all this market utility. So I think that it's very important to get your Bitcoin off an exchange, and you could utilize Foundation Passport and a Stampseed at both of these places and use promo code Green Candle to save you some sats to help protect your sats. So, with all that too, we've also got another great little interview that we just put out here with Carr about the BlackRock centralization. So with all of that, Luke, I think that's just a foreshadowing as to why you should get Bitcoin out of the ETFs, off an exchanges, and into cold storage.
Exactly. I couldn't agree more. I mean, that's the message at the end of the day. So many people trust in BlackRock. So many people are trusting Coinbase. And I think at the end of the day, as Carr lines out in this interview, BlackRock centralization is a risk. We should not be trusting BlackRock. I won't spoil the interview. It's a good one. But I think people really need to be paying closer attention to what BlackRock and these large exchanges are doing.
Amen. Amen. And then with all that, you guys should go on and check that out. And thank you guys for joining us here on another live stream. And we'll be back again later this week.
See you guys.